Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 19th. Hope you guys have a wonderful morning so far today. We got a few economic news releases to go over today, and we'll jump right into it, starting with the housing starts for the month of August. So back in July, we had 1.19 million housing starts on the index. That's basically for the year. Forecast was a dip to 1.17, and it dipped to 1.18, excuse me there. And so it did dip a little bit here. On the other hand, we got the future of home buildings, and this is what we call building permits for August. And so back in July, we had 1.23 million. Forecast is supposed to dip to 1.22, and actually it went reverse. It went the opposite direction, going upwards to 1.3. So even though actual home housing starts have declined slightly, but the building permits of future outlook has gone up. So that's obviously a good sign that we're getting more new homes created here. Last but not least, we got the import index here for the month of August. So July, it declined 0.1%. That's after 3 months. That's 3 months of declines there. But the forecast for August improved. So we had a jump, went up a bit. So 0.4%, and it went up 0.6%. And this is kind of being related towards cost of oil rising. So let's go ahead and take a look here at the headline news. The stock market is currently up. We're at all-time highs on all three indexes, and because they're starting off high, so therefore we're creating new highs as we go along here. And this is on the basically the beginning of the FOMC's beginning of their meeting here. We have a 2-day meeting going on. They begin today, and then tomorrow we'll go ahead and have their announcement. Usually that takes place around 11:15 a.m. Pacific Standard Times, so 2:15 on the East Coast, when Ms. Yellen will go ahead and give her announcement as to what the Fed's decision is on rate hikes or no rate hikes, and then kind of go on her spiel about it. So with this plan, with this meeting here, they aren't expecting any rate hikes this year. They will be kind of looking to see if maybe there will be, but they're kind of it's kind of low rate hike for one this year, especially on the heels of just with the two big tragedies and with the Irma and Harvey coming in here. That's gonna that could potentially set us back. We're trying obviously gonna have to rebuild in those two areas, those two affected areas, and that will set us back. So as an economy. So therefore, by raising rates, just trying to slow things down, and that make it more difficult to tread water, so to speak. So right now they're kind of walking on eggshells as to their approach. Now the next thing, the big thing, is what they're really looking at is the unwinding of the trade balance sheets. So right now it's about $4.5 trillion. This is money. These are assets they've accumulated over the kind of easing period. Now, what they're looking for basically is how are they going to unwind a little bit, meaning that most people, what the forecast is, what they're probably most likely going to do is reduce their buying of such assets. So instead of buying 80, or let's say buying 30 billion this month, they're going to buy 20 billion, and that's the 10 billion that they're not buying is the reduction on those. So, and with these, you get different years maturity dates on there, so that's one reason why it's able to kind of help reduce it over a course. Perhaps maybe it might get capped over about a year or so, depending on how much spread they go into. But what they're kind of wondering again, they're kind of walking another slippery slope because where the economy is at. It's a little going to be, could be potential a little fragile with the two hurricanes. Inflations are very low. So they have to kind of tread water here for unwinding of the trade balance sheet, as well as the interest rate hike. So they're thinking that maybe it could potentially be pushed down the line a little bit further. So that's going to be kind of an interesting sign as to what they say. So stay tuned tomorrow. We'll find out more information tomorrow. See what they say. If they don't say anything about it, obviously they're kind of kicking the can down the street, so to speak. Last but not least, we got President Trump giving a speech to the UN General Assembly. Of course, he's kind of rallying them up behind putting more pressure on North Korea in their talk. And basically, he had some very choice words of his own, saying that we can basically, if it comes to it, we can totally destroy North Korea. Basically, is kind of what he said in those statements. But that really didn't affect the market today. His speech, I think they're kind of growing used to his rhetoric and such, so they really didn't give much reaction to it. So let's go ahead and take a look here at the bond market, see what's going on with interest rates today. Oops, excuse me. Here we go. We're still caught in between the 50-day moving average and the 25-day moving average. So we are up for the day so far. We're down for we're down for the day, but we're up from yesterday. So we were up as much as about 9 basis points, but have kind of come down a little bit since then. And right now we're only up about 5 basis points from where we left off yesterday. Not quite enough for a price improvement from yesterday. Kind of relatively in the same ballpark, so to speak. So let's go ahead and take a look here at the 10-year Treasury. Sorry about that. This is just giving me a hard time today. Again, if you didn't check out Twitter, we did close above the 50-day moving average here, and now we're up about 1 basis point for 10-year Treasury on the yields. So we're up against the next level of resistance. As you can see, it's a pretty narrow one between the 50-day moving average and the next level of resistance here. And we're kind of up against it. As you can see, we did kind of touch above it yesterday, and now we're at it again today. And this is up against kind of the 100-day moving average. As you can see, the 100-day moving average a little bit lower here. We're up against the 100-day moving average as our next level of resistance here. Again, hopefully it can maintain itself to keep the rates low. Otherwise, if it breaks above it, as you can see, the next level is approximately the 200-day moving average. And again, that could, rates could dramatically jump up a bit more further. All right, folks, that's pretty much wraps it up today. Again, rates, really no change in rates today. But if you guys want to come over to Twitter, you guys can find me on Mike Bjork on Twitter, my handle Mike Bjork on Twitter, and get more updates throughout the day. You guys have a wonderful day. Thanks so much for watching. I'll look forward to seeing you guys tomorrow. Bye-bye.